Hey guys, this is James.
I'm Mariz.
Today, guys, we have a special guest. Her name is Entee, and she's with a really good company. And we're going to be talking about. She's with Leader One Financial. She's with a mortgage company, and she's a loan officer. But she's going to be going over with us what you guys always want to hear, which is the California Dream for All program. And we're going to be discussing some of the product highlights. We're going to be going more into details of, some of the pros and cons of the program, and, making sure that is this program a perfect fit for you. And if you want to learn more about it, feel free to reach out to Entee, and her contact information will be down below. So, before we begin, Entee, thank you so much for coming on.
Yeah, thank you, James and Mariz. Thank you for inviting me.
Okay, so Entee, what's this CalHEPA Dream for All program that everyone's been talking about?
So actually, this is a super hot program right now. Like everybody really inquiry about that a lot, and so a lot of people apply for that also. And so this CalHEPA, they have a lot of program before, but then for this program, like this is the first time ever the income limit is they have a big range. Like the income limit is better right now, and so like almost everybody can fit into the program with the less requirement, and then so the program is more perfect. Almost everybody.
Do you by chance know what the income limit is for this program, the California Dream for All program?
So it's depend on each of the county, and so like on CalHEPA they public that also, but for our Fresno County it's like $159,000 per year for the house.
159,000, huh? Wow, that's a lot.
Yeah, so because of that, and so easier for everybody to fit in, and so because the housing is so the house pricing is so high right now, and so it's better.
Yeah, for $150,000, you can qualify for, I would say, if I were to think, that's around 600,000, huh? A little bit north of 600,000, probably all the way up to if you have no debt, I would say all the way up to conforming loan. All the way if you have no debt, so that's pretty good. Now I know that we hear that there's a limit on how much funds there is. This program just released, I believe, like March 27th or something like that, March 26th.
So they not really public how much is the budget they have for this program, but then because of this, so we know they're gonna have a budget, but then they didn't public how much they're gonna give out, and so this is the reason why I want all of the buyers, when they're ready, they have to go to look for the house ASAP.
Right. So there's no budget, no nothing yet. So it's good that they're looking for it. So when they do come out with the program, this is what's going to happen, right? So real quick, can you briefly tell me the overview product highlights of this product, right? So tell us why this product it's been talked about, and why so many people has been talking about it.
So this product is really good because the two things who stop the buyers a lot is the interest rate right now, and then the second thing is they don't have enough down payment. And so like this program, they fulfill one of the requirement, and so they give the buyers like 20% upfront, up to 20%. They can choose 10%, or they can choose 20%. It depend on them. Yeah. And so like they give for the buyers 20% upfront, and then from there they're gonna share the appreciation if they want to sell the house, or they title transfer, or the second time after refinance. The first time is okay, they don't take it back and anything, and then and then CalHEPA, they don't get any interest on that. You can keep it forever until you sell the house. And so they only apply for the conventional loan. And so this is the reason why, like credit range is a little bit limit, so you have to be like a 660 above. Six, yeah, and then from there you. But then because the credit is not like a really high, they don't require like 700 or anything. Yeah, 660 above is like really good, and then like a lot of buyers can fulfill in that. The biggest requirement is you have to be the first time home buyer.
What's considered as a first-time home buyer, meaning that you haven't bought a home within the last 3 years type of thing, or is it more so? Yeah, so yeah.
You didn't own the title of like 3 years, like you didn't have the house, or like you can be on the title, but then you don't live in that house for the last 3 years, like you didn't own any.
I see. So kind of like you can be on the title, but you shouldn't be living in that house. Or if you haven't been on, or if you're on that title, then you should be buying a house within the last 3 years. Your name shouldn't be on a title or a mortgage, right?
Yeah.
Okay, so very good. So they'll grant you up to 20%. Now, let me ask you this. Have they released anything about the interest rate for this program, or normally it's a little bit higher than your traditional conventional loan, or is it the same?
So actually the interest rate is because CalHFA, a lot of them is they require is like the borrower pay only. So they have the interest rate for all of the lender is almost the same. And so like the borrower just have to pay for their loan officer, their loan company, they pay for the title, escrow company. And so like it's a borrower paid. And then the CalHFA, they give the interest rate for every company. It's like the uniform one.
Okay, so it's like a flat uniform interest rate for it. It's not like it's higher. It just really depends on what lender you use and how much the fees that they charge. And some of them, you pay for what you get, right? So it's important that you shop around for lender that are well experienced in this type of stuff. With that being said, there's some property requirements, some borrower requirement. If you guys want to find more and go more into detail about this program, go to calhefa.cal.gov and you want to click on the California Dream for All program. Can you go more into the detail where they, where the 20% down equity and all that stuff? Because I know there's some misconceptions. So like, for example, if you borrow 20% down for let's just say in Fresno, right, for a $400,000 house, which is $80,000. What you're saying is that with this program is that you're pretty much in partnership with the government, which is the California government. So when you do sell it, they get 20% profit, right? Equity.
Yes.
So let's just say if you bought the house for 400,000, the house went up to 500,000. You borrowed that 80,000, so now you profit 100,000, right? In terms of equity, because you borrowed, you bought the house for 400, and now you have 100. That means you owe the state of California for that loan $20,000 when it's time for you to sell, or refinance.
So you have to pay back the $20,000, like $80,000 you borrow also. And so like total final number is going to be like $100,000. Is 80, like at first they let you borrow and then on the appreciation.
Yeah, which is really good. So let's just say like that $80,000 that you borrow. So now, right, your loan, right, is about $320,000 because you borrow $80,000 to buy a house. So now your loan is $320,000 and you sell the house for $500,000, right? So that means you profit $100,000. But then there's also an additional $80,000 of equity that you borrowed from the government. So you pay that $80,000 equity first, but then the profit that you guys made by partnering up with California meaning loan bond, they get that $20,000, and then you get to keep pretty much $80,000 to roll over to your new house, which is a really good way for you to partner up with a lot of people to make housing affordable. Now, Entee, for 158,000, or for basically the income limit, right? Now, is that for single or for household or for that dual, or how does that work?
For household, like for all of the people on the application.
So all of the people in the application. Very good. Well, that's fantastic. So how do people take advantage of something like this? What do they need to do? So first thing is first, they need to apply, right, through a lender that is partner up with CalHEFA, correct?
Yeah. Like some lender, because they have only approved lender or like the broker to work with the CalHEFA. But then you know, like James, the 20% right there when the CalHEFA they give for you, you can use like 15% on the closing cost, and then 5%, no, 15% on the down payment, 5% on closing costs. Depend on your budget. Yeah.
That's really good. So then you can use that 5% to buy down a lot of rates. So then your monthly payment will be a lot lower. So then you don't have to stress.
And then when you're down like 20% right there, it's like you don't have to pay the mortgage insurance also.
Yeah. So when you're down 20%, you don't have to pay your mortgage insurance. But then if you put 50% down and then you put 5% down, you'll still have to pay a little bit mortgage insurance, but not a lot, because you know. But you can always get to get rid of your PMI. You can always call up the mortgage company or the lender, and then get it reappraised within the next couple of months or year. And then if it reappraised for higher than what you purchased it for, and then it shows that you have 20%, I believe it's like 22%, or is it 21% equity?
Just 20. Yeah.
20% equity, then they'll remove the PMI. Okay.
Yes.
So let's go more into detail about some of the program, eligibility. I don't want to take too much time because this, if you guys have additional questions, do reach out to Entee. Her contact information is down below. And if you guys are interested in buying or selling in the Fresno market or the Madera County, our contact information is down below too. We'll love to help you guys out in your journey in terms of buying and selling and investing in real estate. But Entee will help you guys get all the loan programs, so then you guys can make sure to take advantage of these programs. Very good programs. I think it's like being in partnership with like a business partner, right? That is not like, it's not like 50-50, it's actually 80-20. So you're kind of like winning in a sense. So borrow requirement, first time home buyer. You have to occupy as a primary resident, right? Pretty much complete a 2-level home buyer education council course. So basically you gotta complete a educational course, right? Buyer course.
$99.
$99 for the course. Now, which is super worth it. For $99, basically the course pretty much teach you about like, how to manage money, like what are you, what is all the terms in terms of the mortgage, PMI, stuff like that. Like, will help you like educate yourself on the home buying process of being a homeowner and all that good stuff, right? It's really good. Meet the income limit. So we already went through that for Fresno, which is 150 something thousand. That is pretty much it. So property requirement, manufactured home is permitted. So basically we can do a manufactured home if it's on real property, which is if it's on real land. And then condominium must meet the guideline of a first mortgage, guest house unit, single ham. Okay, so there you go. There's more details about this type of stuff. But this program is similar to kind of like the CalHEFA, where it's you go through the portal, right? Once you do the applications and everything, and then you punch the applicants through the portal, right? Information through the portal. When will they open this up? I mean, they just talked about it, but when are they going to start? And is there like, we talked about this already. We heard that there's about like a certain amount of income level, 200 million. Some people talked about like there's going to be only about like 2,000 applicants that's going to probably be accepted. This program will be pretty popular, and I think that they'll probably expand it even more once the fund runs out. So this is really good for a first-time home buyer, for people who don't have that money down that needs to get into a house that don't want to rent, So am I missing anything else, Entee?
No, like if you have the income, like they depend your income a lot. Like if you have a low income, it's mean like 80% of the AMI, like
Yeah.
under like $59,000 for your household, like for all of the application, on the all of the people on the application. So like if you $1,000 for Fresno County, so you just have to pay for them 75% back of the money you borrow. And so it's even better. Yeah.
Very good. Babe, do you have any questions for Entee about this loan program? I mean, it'll talk about what is the interest rate, depends on like, you know, the lenders and other factors. Talk about educational requirement, like you go online, virtual tour, in person. And then how do you apply? It'll walk you step by step on how to apply, right? Very simple, same thing as you do with a lender. You need your bank statement, you need your pay stub, employment history, previous tax return, and then you need to fill out a loan application. And Entee has a loan application. And then if you want to apply and start applying, we'll put a link on the bottom of this video on how to apply. And if you guys have any additional questions, feel free to go to calhefa.com.cal.gov and then reach out to Entee, send her a quick text, send her an email. And then if she doesn't get back to you through a call, she'll call you right back. But if you text her, she'll text back quickly. And if you need help buying or selling, feel free to text us back, text us also as well. We'd love to help you guys out in the Central Valley. So anyways, that's pretty much it. Hopefully you guys enjoyed this video, this, you know, quick educational video. And yeah, let's close it off.